Happy Friday, Brian Manning here with your weekly update. A little bit of a snow day today, so I'm going to work from home, but let's get right to it. Fed week this week, but before we get into the Fed's information, let's look at what happened before it. Tuesday, we got retail sales. Retail sales took a big hit in a downward revision of the prior months, down 0.6%, which is a pretty big decrease of what they were looking at for retail sales. Moving into Wednesday, a lot of information on Wednesday. First, we got CPI. So CPI is a consumer pricing index. This measures inflation on the consumer level, and CPI is, we look at really more heavily than what the Fed's looking at, which is the PCE. And the reason why we look at CPI is because it includes housing and also out-of-pocket medical expenses for us as consumers. So year over year, CPI is up 2.3%. Last month, it was up 2.2%. So we're slowly seeing an increase here in inflation. And, Federal Reserve talked about raising rates when inflation was breaking above 2%. And here we are at 2.3%, certainly giving them something to think about. And definitely volatility going into the Fed markets, Fed meetings this week. So Federal Reserve met this week, Tuesday and Wednesday. On Wednesday, they did a big press conference and, of course, didn't raise rates, which is exactly what we expected. But their comments were very dovish. So dovish meaning that they were unlikely to take aggressive actions for rate hikes here in the near future. And certainly seemed even kind of afraid to unravel what they put into everything so far through the process of quantitative easing and their bond buying program. So the dovish comments certainly helped the markets on a global level. Stock markets rallied, and yesterday, we had a huge market in the stock rally. So right now, we're looking at stocks in the S&P 500 approaching what's called the 200-day moving average. And if the stocks can break above this 200-day moving average, it probably won't be good for bonds, and we'll see mortgage rates increase a little bit. But if stocks hit this ceiling of resistance and kind of bounce down and markets go down, this will be favorable and will certainly help out mortgage rates. So amazing rates this week, and really watching to see what's going to happen in stock markets here in the near future. Any questions, give me a call. Love to help you out any way I can. Have a great day and a wonderful weekend.